Hello everyone. I'm going to give you a little tour of this sample monthly cash flow budget that I've provided, and I'm going to break that tour up into two videos. This first video is about the structure of the budget, and the second video will be about some of the calculations that go into the budget. All right. Or at least some strategies that I'm using here that might help you with your own budget project. Okay, so this, if we look here at the information that I've provided, here let me zoom out a tiny bit here. The top portion you're seeing just shaded in there, that's information that's not part of the budget that you'll provide me, but it's information that I used to help calculate the information in the budget or the budget detail. And so if we look at this information here that starts with the months and the beginning balance and goes all the way down to the total balance, that's the budget. That's what we would copy and paste out of Excel into our Word document and provide it to our reader. I'll zoom out even a little bit more. But there's some working text up here and down here that help me make these calculations. And I could get rid of them in the process by hiding them, but I don't need to, because you're not submitting the Excel spreadsheet, you're submitting you're copying and pasting the Excel spreadsheet in. So let's just walk from the top down. This is going to be very typical of a cash flow budget, all right? So we've got columns here for each month of the year, and then a total column. The total column represents the whole year. And so just like how the beginning balance, which is the first row in every cash flow budget, the beginning cash balance or the beginning balance, just like how January's beginning balance is $600, the beginning balance for the year was $600. That's how much we started the whole year off. And so when you think of this total column over here, you can think of the whole year's cash flow budget, and that each one of these is kind of an individual cash flow budget for each year. All right. So the beginning balance is the first row. Then we have a set of rows that are about cash receipts, or it could be called cash inflows. That's different than revenues, but we'll usually see the term cash receipt or cash inflow on a cash flow budget. And then the next line items would be items that would help us recognize how much cash we're bringing in. And you'll notice that these numbers are probably not going to be accurate exactly to what happens in real life, because we've made assumptions about how many hours we'll work and that there's been no change to the earnings. And so there's a lot of rounding that goes on in budgeting. Sometimes if it's worth your time to be very specific and precise, and other times all you're going to do is be wrong with a very precise number. And so in here we have other sources. We don't know exactly, but maybe the person usually gets around $100, and some months it might be 100, some months 110, 120, some months 90 or 80, and so they've just put in 100 every month because that's the best estimate. So rounding is normal, okay? Also, I want you to note that the section begins with the dollar signs and it ends with the dollar signs, but in the middle I removed the dollar signs. I also took all these numbers and rounded them to the nearest dollar, so that I changed the formatting of the numbers so that I'm not showing the decimal place and the pennies, because that's just adds more gray space that probably in a budget of this size, the penny, knowing how many cents are involved, is not going to be a huge influence in any kind of management decision that we would make. This, by the way, is represents maybe a college student, and a monthly cash flow budget for the college student for the whole year. The next section, so the cash inflow section ends with a group called, here I'll zoom in here, ends with a row called cash available. And so that's simply the sum of the cash that was available at the beginning of the month and the cash that came in during the month. That's all the cash that's available, the beginning balance plus the inflows. Then we get into this next section that's cash disbursements, or sometimes referred to just as, or labeled as, cash outflows. And there are a variety of categories here, and some of them are the same every month, and some of them change through the year, and that's okay. That's the part of the reason why we do a cash flow budget by monthly basis, is that some months may be more difficult for us to get through than others. And then that it gets to a total down here of the total disbursements. So that's just going to be the sum of all of these disbursement categories for the month. The next section after the disbursements begins with the subtotal. So the subtotal isn't the ending balance, because we're going to maybe do, in most organizations, there'll be a little bit of either borrowing or repaying the principal on a loan that we want to account for separately from the operating flows. But the subtotal is going to simply be the cash available subtracting the disbursements. Then we deal with any borrowing. And borrowing is going to be, we're going to have to borrow some cash to make it through, and we didn't borrow enough because this person still has $140 in the hole. And so in the next video, I'll talk about how I deal with that. But the cash borrowing has this inflow of $1,000. So there was $1,000 that was borrowed in January, and then in February there's a negative value of 124, and that means that there's $124 of the outstanding principal is being repaid. The interest on this cash loan is being accounted for up here. We're recognizing the interest payments separately. So that's just the payment calculation separated both into the principal component and the interest component. And then there's also going to be borrowing for a car. So here's the purchase of the car, and it's a disbursement, and here's the borrowed money as for the car. And that gets us to our ending balance. And we're concerned about this ending balance because it gets negative, and this individual can't go negative. They would need to borrow money to be able to cover a negative value. And then the next section, so that gets to the ending cash balance, which is just calculated as the subtotal plus any new borrowed money, and because we're plussing, and if we get one of these negative values, it'll subtract a repayment. All right, so that gets us to this, the subtotal plus any borrowing activity, and gets us our ending cash balance. And so this $140 as an ending cash balance in June will then feed up into February as the beginning cash balance in February. So you can see that if we double click there, you'll see that the ending cash balance is lit up because that's where the reference is. And that happens all the way across. The beginning cash balance in the next month, in 1 month, is the ending cash balance in the prior month. Okay. The other thing that you'll see here is information on the outstanding principal of borrowed money. So here's the $1,000 we borrowed in January, and you'll see that we pay down $124. That's certainly a rounded number, and that means that our principal is that $1,000 minus $124 to this amount $876 that's still outstanding in February, by the end of February. And then here it is in March, April, May, and we actually pay off the loan. Here's the last month we make a payment on the cash loan, but we've been paying this car loan over a long period of time. Okay, and then all this information down here is just information that I was using to be able to calculate these numbers, and I'll talk about that in the next video. All right, so let's just look here and double check. The other thing I think to recognize is that to get rid of these dollar values, if everything here is, let's say you've done it all as in accounting, and we want to get rid of the dollar values and we want to round, we can get rid of we can round up to the dollar by clicking over in the number formatting. But if we want to get rid of the dollar sign, we will have to open up this dialog box and make sure that we're on accounting. We still want 0 decimal places, and we say we want no dollar symbol, and that will get rid of that dollar symbol, and it will kind of clean up the page. By using the accounting formatting, you'll also make sure that all your numbers are right justified. You certainly want right justified numbers. And another thing that I'm doing in here is I'm indenting the line items. And I'm using some specific underlying strategies to try and break up the page and help the reader be able to follow the information. So when I'm ready to copy and paste this out, I would just go to View. I would remove the grid lines. I would then copy this information like so, and then if I go over here, let me remove the grid lines here as well. So let's imagine that I'm in a Word document here, and I go here to paste special, and I paste it as a picture. And so now you can see that I have this picture that I'm able to resize, and maybe I'd want to crop out some of this lines to make sure it fits well. Maybe my numbers need to be, maybe the font size needs to be changed, or the font type needs to be changed. You cannot make all those. You'll have to go back and make all those changes here and then copy and paste again. But that's how to deal with the formatting. Okay, I'll stop this video and then go to the next one, and you can look at my information on some of the calculation strategies I'm using.